Ruby's got the spirit today.
I'm
Jane's
Wonder Woman.
Wonder Woman. All right.
Yep.
Well, I'm going to watch my P's and Q's then. So I get that.
I'm going as a boring mortgage guy.
Yeah, something scary.
Replace mortgage.
Well, we are going to touch on the topic of investors. Kind of give a little history about that too, because Pat and I were talking about, geez, what do they do about that? I mean, you got all these institutional investors, they're holding all these rental properties. We're just not of the camp that says, well, we want more government interference in real estate, but there's something really out of whack about what's going on here. And so I want to start by kind of taking a historical glance at how we got where we're at without reading everything to you. But it just, the one thing that we saw, especially in, you sent me this, Pat's article of Evidence Matters, talking about, basically how we got here. And so after the big financial crisis in 2008, we were just left with a bunch of abandoned houses and with people with ruined credit. And so they made it easier for investors, hedge funds to come in and scoop up a lot of these properties, put them back together because everybody tore the crap out of them. And they turned the majority of them into rentals because there was no demand to buy because, again, nobody had credit. So that they kind of, now you got to try to put the genie back in the bottle, right?
Mm-hmm.
And there's a couple different articles out there. There's one here that shows that we have top 10 U.S. housing markets with the greatest share of institutional investor sales in 2022. Only has us listed here at a little over 15%. But then there's articles, recent ones that come out that say it's closer to 30 here in Arizona.
I believe the closer to 30.
Yeah, and the thing is that, and then there's another article here that says that investors bought a quarter of homes sold last year, driving up rents. That's an article from 2022. I think the challenge too is we don't see it. It's not on the MLS. So they've gone in and bought like 30 to 50 homes from a builder. And that just doesn't show up in anything that we look at. They buy homes from, distressed homes in the market before they hit the MLS. Things like, open door. They don't just swoop in and buy your house. You got to request an offer. So that's not as pronounced as, once you put a listing up, then these cash investors come swooping in. They were pretty active in 2021. And so now that we're here and they own all of these homes, what do we do? There's an article here, and I'm going to toss that to the group here in a minute, but there's a couple people in Arizona in the state legislature, and they are proposing, because, a lot of this can be handled locally too. It doesn't have to be DC. That's why they've introduced House Bill 2763 and Senate Bill 1542. Mears bills aims at stopping hedge funds and corporate landlords from dominating Arizona's housing market and artificially inflating housing costs. It says, and it takes on the corporations jacking up housing prices by capping the number of single-family homes that they can purchase to 100 a year. And so the first thing that comes to mind to me is, how do they track it? I mean, how do they know how many homes a certain investor or hedge fund has?
Well, and they try to get around it too. I don't even know if Ruby and I, when we first started working together, I used to work for a gentleman by the name of Dan Valentine, and I ran his acquisition department. And we were buying properties not only at auction, but straight out of MLS. And we were working with, that's at the time that a lot of the Canadians were buying. So 2010 through 2012. And we literally could not buy homes fast enough. We were working with $20 million funds. And what they would do is we had one investor that had raised $20 million in capital, but he had about 13 different LLCs. And so literally we would once we'd fill up, he had a max in each LLC of what he could own in those. And we were buying homes in Buckeye, for instance, new builds that were only a couple years old. We could buy a 2,500 square foot house for, 4-bedroom, 3-bath for $65,000. And we bought every single one we could possibly buy. That guy alone had close to 700 homes. He still owns over 350 of them as rentals.
And because they're broken into several different LLCs, how are they going to cap them at 100? They're not going to be able to track.
They really, really researched it, but
nobody's going to do that.
They're not going to do that.
Well, Pat, you and I thought you had a great idea. Yeah.
This one article that I pulled up from this, it's actually right here. Came out. If you want to flip it, institutions to blame for how high housing prices. I think it kind of goes to what we're talking about, actually, Jackie. And it says the question one is, what is an institutional buyer? First of all, because the institutional buyer, it says here, could be private equity, corporate landlord, investor. You got LLCs, people in single groups. Talks about you got small groups, you got large groups. Is a guy who owns 20 or 25 homes, he's considered an institutional buyer too. How do you define that? Who's buying what? The groups.
Well, it was interesting because when I was going through the two bills that were proposed, trying to look at the details, the majority of the language in the bills was describing what they call an institutional investor. It was just ripe with language. It's an investor has this, and this.
Yeah.
And in just one line, it said limit to 100. But the bill was mostly just definitions.
Yeah.
And I thought that was, but you and I spoke, I've got a window open and somebody's drilling something out there. Can you hear that by chance?
No.
There's some background noise somewhere.
Yeah,
Somebody talking.
No. Anyway, it just stopped. Hope it's. I got a window open. I may jump up and close it.
Pat, that one was
idea.
just in your
The other
head.
day we were talking about the $25,000 grant, and believe it or not, there's people out there waiting for this. And I'm going to remove myself here for a second, come right back on. Going to close the window. Please bear with me.
And then there was 3.
Yeah.
Guys. Pat, I remember that one time when Rick was gone and you waited for a little bit and then you had to kind of take over.
Yeah, I didn't know what to
Remember?
do. I was like,
you didn't realize we were
I was in
still
a boat
alive.
with no oars.
You were like,
at 25,000. Okay. It's just tossed out there. 25,000 down payment. Well, right now, the only people that are buying distressed homes or homes that just need work are investors, and first-time home buyers are ignoring them. Either they don't have the skill set or they don't want to mess with it. And so they're letting the investors come in and buy them, and then they're buying them from the investors later at a full retail price. So instead of,
But here's the thing with that. Here's the thing that a lot of those first-time home buyers don't know, that we really need to do a better job of trying to educate people out there. There are loans that allow them, and Pat, I'm sure you know this, of course, but there's loans that can, like, it used to be the 203K loan, or there's different ones now, I know, but that allows those buyers to qualify to buy those homes based off what they're going to be, they're valued out after they're fixed up.
yeah, that's the guy we had on a couple weeks ago.
Yeah, exactly.
But let's sweeten that pot a little bit as we were bouncing around ideas. What if instead of giving people down payment money, which, it's great, but it's going to have so many restrictions that, the average person's not going to qualify for it. What if they're out there that they offered even at the state level and just said, it's not so much a grant, but it's a very extremely low interest rate renovation loan that goes on top of your existing mortgage. Now there's a little bit of incentive. And then now you cap these guys, which probably has minimal effect. But what you need at the federal level then is tax incentives for them to offload these properties. What if you have a tax holiday for 1 year?
I like it. You guys need to start writing letters again.
Well, we wrote one to Jerome
Powell.
Powell. We're going to have to evidently send him another note, Pat, because
Yeah.
rates went up again. And so, he's probably doing that just to hear from us. But
And the thing is, Rick, and this is what I heard, and you guys probably know the answer. I don't know what the amount is, but there's going to be an income cap for the people that get the 25,000 assistance from, what's her name? And for
that thing's
average-
nothing but that thing's nothing but chatter. I mean, if you're sitting there waiting for that 25,000, keep in mind it's 6 months at the earliest before Congress does anything about it, and then so at least, and then going to build 4 million homes. Well, same thing. 6 months before they do it, a year and a half before a shovel hits any dirt. So you're 2 years out from anything coming to fruition. But I think there's a pool of homes out there that could be hitting the market. And our inventory is going up, but it's not going up at the level where it's giving enough people any relief. So I guess after reading all this stuff, I'm still confused. I don't know if it's 15%, 30%. I really don't know how many of them out there are corporately owned. And then on top of that, that company that builds these build to rent homes is expanding once again like crazy.
Yeah,
because their product's moving.
Yeah.
So I don't know.
And we
if they
thought rents were going to nosedive, but I'm not seeing it happen.
Not yet, but there is a lot of inventory that's out there that is coming on board. You can see an awful lot of framing going on, especially in the East Valley. But
well, have you guys seen all that along the 101 in Scottsdale? All the luxury apartments being built. I mean, some of those are like $5,000 a month.
Yeah,
it's nuts.
It's ridiculous. It seems like the product that's going out there is any type of apartment complexes are, the rents are probably $2,500, $3,000 a month. Just for an apartment. I mean, I really think that rather than like this $25,000, it just seems like they're just throwing this out there. If we sat down and studied this, like you and I, Rick, have been kind of digging in this the last couple of days. Just because I threw that out there. I'm surprised that the institutions aren't. It doesn't seem like they're as big as we think they are. Overall, because I mean, this one, this right here, this chart right here. If you pull my thing up, you got. Let's see here. See if I can. Let me see if I can. I'm making the wrong thing smaller. But I mean, you got mega investors. This is the categories. Smaller investor, local investor, trusts, flippers, builders. You got all these different institutions. They got they're coming in. This is in 2023, 445,000. But I think rather than it seems like they just haphazardly throw this $25,000 out just to, keep everybody happy. It's just a popsicle that they're throwing out there, a lollipop. If they sat down and really studied, looked at it from a local standpoint, do something federally, but then you're going to have to do it, like you said, locally, give every state a certain, mandate of how, because every market, it seems like reading these articles, every area of the country is affected differently by institutional investors, like the Southwest, the Sun Belt, versus Wisconsin. And, it seems like it's very geographic also. Wouldn't you agree?
Yeah. And even this thing that you're putting up there down on the screen on the bottom, it says any buyer whose name includes, so they go through what they define as an institutional buyer and what they don't,
Yeah.
One of the following keywords: LLC, trust, corporations.
This is the chart. This is a chart. The iBuyers, this is like 2023, but it said first tier investors, 1 to 9 properties with 125,000 sales. iBuyers was 3,000. You got tier 3, 100 to 99 properties, 4,600 sales. So you got different tiers of how many properties they've been buying. But like I said, it just seems like they're just throwing these Band-Aids out there, 25,000, like that's going to really solve it. And I think it's going to be a combination of a lot of things. It's going to cut in the regulation. That one article that I pulled up, I don't have it available, but it said that costs and regulations add about $93,000 to a home.
Well, this is the kind of stuff that housing and urban development should be focusing on instead
Yeah.
of, they should be focusing on what's causing the shortage. And like I say, it started because of the great financial crisis, and we needed it. We needed somebody to come in and buy these dilapidated homes and renovate them, put the refrigerator back in, put the air conditioning unit back in. And
Take the
we
fish
didn't-
out of the wall.
yeah, we didn't have buyers, so they did that, but now they're holding them because rents went up, and they're continuing going, wow, this is a good return on investment, a good ROI. But it's time for that to start entering the conversation and things changing. The other thing that I want to switch over here too is rates are not going down, Pat. They're 7.09 as an average now. So what's the main driver for that? I know the inflation number came out today and didn't really float anybody's boat.
Yeah, it's obviously a combination of our thing. Every data point is changes, from week to week. Actually, believe it or not, this week has been relatively, we've seen this downtrend since about October 15th. We saw this staircase climb down here. This is a year. This has been since the rate cut right here. We've seen, this is the prices, rates go up on inverse relationship. But, we had every day, it's like a data point. You got tomorrow, you've obviously got some big numbers coming out of inflation. But uncommonly, though, this week has been relatively, the close on the bond has been, the closing point, the 10-year has been 427, 427, 428, 428, the last closes. So the bond, it's been, I think we're calming down, but obviously with the election, you just got a lot of, there's a lot of uncertainty. Nobody can really forecast. The bonds have hung in there the last 2 days. They've firmed up. Do we go a little higher? It's the way the bond trade today. It seemed like we kind of steadied the ship, at least short term.
Yeah, I think we were talking last week. We were expecting a lot of volatility this week because there were so many different data points. The unemployment numbers, or the jobs report, the JOLTS report, and then we had the core inflation numbers came in at expectations, and then we had GDP. And there's a lot of noise inside all of those numbers. You could dissect them and argue with them, but it still would have created a lot of volatility in the market. We didn't see it.
We've got the payroll numbers coming out tomorrow. Payroll, obviously unemployment tomorrow. So it's, I think
election year jitters. Take a look at this. This is my 7-day moving average. And so these are contracts. The back, how many new contracts are the past 7 days. I don't know why my mouse does that. The line above it is the number of new listings, not active listings, new listings, because you can see our active listings are 21,349, but they're both going down rather significantly. The new listings really dropped this week, and new contracts went down about 150 to almost 200 contracts. People and it's a combination of, we have an election and we got jolted by rates. So it's had its effect this week, except for luxury. Luxury is doing incredibly well. Anything above $1 million, $1.5 million. I saw $1.5 million home in Gilbert sell over a weekend. They had 7 people come in on a Friday, contract on a Saturday. They were done. And so those guys aren't hurting. Now, if we look at our active listings, now my projection was we were just going to follow along 2022 levels. I still feel that way. I think, Jackie, you thought it was going to kind of remain flat. So
I think it's going to.
We'll see.
I think it'll drop off some as we get a little closer to the holidays, but I feel like it's going to just kind of stay stagnant.
We'll see where the red dot is next week. But based on my 7-day moving average, though, that's an indication over the past 7 days. Those are the numbers that are going to roll into this chart next week. I think you're going to see a downturn because it's already there, because the number of new listings has dropped. So, but the number of contracts has dropped. So I could be all wet. So it's not going to it's not going to change anybody's life. But it's an interesting number to follow. We look at listings under contract. Surprisingly, they're up over last year on week 43. We were at 57.92 last year. We're at 66.83 this year. And pending listings also kind of had a short uptick. You got 3 different numbers I'm following there, and none of them seem to be making any sense. Now, before we got on, Jackie, you had asked me if I saw our favorite guy talking about a house in Levine, and he said that it was a short sale, and that area is down 20%.
Yeah.
Well,
So he put out a video that prices in Phoenix are tanking. The crash is coming, of course. And he showed his little reventure app that, of course, he's always trying to sell. And basically, I did some research on it because one of the things I don't agree with, and I don't know, I just don't feel like it's right when he shows the actual address online. I think that's wrong. And so he said it was active, but it's actually under contract.
I'd be very upset if I was an agent and that came out.
Yeah.
And the homeowner. I mean, the homeowner, I feel bad because they're probably embarrassed, and then whoever the agent is that sold it to them. But what had happened was, it's kind of one of those patio homes that it's, a 2-story, it's like 1,500 square feet, 1,500 square feet, and they're on like a 3,000 square foot lot. You guys know what I'm talking about. One common wall with your neighbor. And when I started digging into it, because I'm like, my God, they really did overpay, and they're selling it as a short sale, and they had bought it in 22. Well, as soon as I looked at it, I'm like, there's no way that place was ever worth that amount of money. I don't know how they got an FHA loan on it, which was surprising. So they put the minimal down, of course. So they're way upside down. They're trying to sell it for like $80,000 less than what they paid for it in 2022. But what happened was, when I was researching it and trying to figure this out, that little section is in the middle of a whole bunch of regular single family homes. And so that's what the single family homes were selling for. Not they were on 8,000 square foot lots. They didn't have common walls. They weren't PUDs. And so I think what had happened, but I just don't know how an appraiser appraised it, because it did close FHA, that the value was in the single families, not these.
Yeah, so, well, pricing is definitely under pressure. There's no doubt about it. Things are slow, but I just don't like how they cherry pick one house and go, oh, it's not that you're always going to find that one house, that one offset.
Yeah, and I looked all around it. There was hardly any foreclosures in the area. Everything else seemed like it was like the market was stable. Maybe it came down 2 or 3%, but that's normal for this time of year.
Well, that's why I pulled up the chart there and just showed and says, well, that's not down 20%. These are average sales per square foot in Levine. Now, there's some parts in the valley that are taking a hit. If we want to look at Buckeye, a little bit of a hit from the peak here. Maricopa is going to have a little bit of a dip, but not much. There's no bloodbath out there. It's slow. And so, people are writing offers that don't make a lot of sense. I mean, Jessica was telling me a deal that she's got going, and somebody had a comment on a video, and I think it was on Caitlin's. He goes, I'm not offering anybody over 2019 prices. Well, good luck with that. You're going to have to go to Ohio for that.
Right.
The difference in 2019 and now is staggering. Just look at how many people have moved here and what's happened. And yes, prices went up. They're way out of whack, but you can dig your heels in and say, I'm not offering anything more than 2019. They'll just reject it.
Yeah.
It's gone. So do you agree, Pat?
Yep. Yeah, totally.
So next week, the election is Tuesday. Just going to log in next week and see what changed? What was everybody all worried about, and just watch it, because we're going to have the holiday slowdown, but I'm telling you, none of the fundamentals in real estate are going to change. We're slow today. Any guesses on whether or not we're going to be slow next week?
Yeah. We'll be slow next week.
Well, we
then-
got the election on Tuesday, and we got the Fed's meeting on Wednesday, so that's gonna be some potentially moving. But yeah, the bond market today, there was a hiccup in the European bond market today that kind of slid over into the U.S. market. So, but there's just been a lot of lack of conviction right now. Obviously tomorrow's jobs report, it seemed like as though when the numbers, ADP numbers came out yesterday, the bond market was kind of shrugged its shoulders, so it firmed up. So maybe that's a telltale sign that maybe it seems as though that the numbers have been reacting a lot less within the last year versus 2 years ago in terms of these big wide swings. So,
well, I think what we're going to see a good old normal November, December that's really slow. And then people will hang in on their price for January because everybody's always optimistic going to the first of the year. And then we'll just see how many price reductions we get in February. So I guess what I'm saying is I don't see a whole lot changing between now and the end of January. And it slows down at Christmas, and that's when us realtors finish our continuing education.
I think a lot's going to depend on rates.
oh yeah,
And I don't see a lot of movement there, Jackie.
Yeah.
No.
Not
I think
January.
we've seen the top end of it. The last year and a half, the last October, April, we saw low sevens. I mean, right now they're high six. I can get high sixes basically. It just depends on your rate, your program, how much you're putting down, obviously. But the quote that you saw 7.09 was obviously the rate. The Freddie Mac has that survey. It's usually a little delayed. So, but I think we're back to, if the market's going to be slow in terms of listings and contracts, I think we're back to the 2-1 buy down. Basically where you can get a seller to give you $8,000 to $10,000, get your loan, your note rate down 2 points. You can get $8,000 to $10,000. You can get into something, because I just don't see anything really. It doesn't seem like a very exciting market right now.
No, it's kind of frustrating. And when you're searching too, because I'm not, everybody's saying, oh, there's a lot more listings out there. Well, when you really get into a price point and you've got specific areas, you still might only have one new listing show up in there for the week.
Yeah.
In total, it's growing. But when you've got a search built for somebody and you get up in the morning, you pour the cup of coffee and you look and go, crap, it's the same list.
I think people are just getting sick of this election crap.
Yes.
Yeah, I can't even watch TV anymore.
Oh God, it's getting nauseating.
I'm tired of the text messages. At 7:01 a.m., my phone starts dinging with text messages.
It doesn't do any
goodness.
good to
Again,
block them either, does it?
What's that?
It doesn't do any good to block them either. I mean,
No.
they stop, they just use another number.
Yeah, I just delete them.
I learned that from dating.
People were always blocking you, Pat?
Yeah, they're blocking. I just find that I have ways of getting around.
You have like 4 different phones.
Yeah. Burner phone.
Yeah. Yeah. You're the only loan officer I know that's got a burner phone. So.
Oh my
funny.
goodness.
Well, folks, we're going to cut her short. I'm going to get out, going to go to a Halloween party, I guess. Ruby, you're going to fly off to yours. And,
Yeah, back to the Amazon. I'm Wonder Woman today.
Today.
I'm Wonder Woman every day.
There you go.
Jackie's going as a one-armed agent.
Yeah.
So
Representing the USA.
there you go. There you go. Well, look, everybody have a fantastic day and a great weekend. And boy, let's see what happens next week, huh? May your
right.
person win.
See you on
Unless
the
it's
flip
not
side.
the person I want, then no.
Right.
We're gonna keep this show neutral.
Well,
Yeah.
I did
Well,
post a survey in the community tab. Who do you think will win the election? And we're 80% Trump and 20% Harris out of 184 votes.
Well, that's awesome.
That's good.
CNN and none of the news outlets have picked up on that poll yet. So I'm waiting. So I
was going to wear my Trump hat today, but then I thought I better not be too political. So I'll just wear USA.
Yeah.
Hopefully
See, now
get the
you're
point
just going to
across.
get haters because you said the word. So.
I know.
Oh, wow.
All right, everybody. Talk to you soon. Have a great weekend.
You too.
All right,
Bye-bye.
bye.
Bye.